If you're ignoring this supposedly ancient blockchain, you are risking overlooking what might just be the single most significant strategic pivot in the entire Layer 1 space today.
Now, a lot of people have written Flow off because of its early NFT history, but the on-chain data from Crypto Global News, well, it reveals a pretty staggering truth. If you look at total value locked, which is basically a measure of how much money is in an ecosystem, Flow's growth is absolutely crushing its top competitors. We're talking over 10 times faster.
And look, this isn't just some one-off temporary spike. It's a steady, consistent climb that totally defies its current market rank. By the end of this explainer, you're going to understand the brand new economic engine driving this insane growth and exactly how it's being built to pull in massive institutional value. Okay, so what in the world is causing this massive shift? Well, it all comes down to a fundamental change in their philosophy. They're moving to something they call the Enshrined protocol model. Think about it like this. Before, you had Dapper Labs building these closed-off, siloed apps like NBA Top Shot. Now they're building core financial tools like lending or stablecoins directly into Flow's base layer. And what that means is these powerful tools aren't just for one company anymore. They're open for any developer to use, turning that old walled garden into a booming collaborative city.
And this quote just brilliantly nails the core idea. It's all about unlocking liquidity that was previously trapped. Just imagine all that value that was locked up inside NBA Top Shot. In this new world, that value could have been fueling the entire network, everything from lending markets to brand new financial products. The whole point is to let that value flow free.
All right, so the first major protocol built with this new strategy is called peak money, and it's designed to tackle one of the biggest, scariest problems in all of decentralized finance.
Yeah, you heard that right. Zero liquidations. Now, in almost every other DeFi platform, if the market tanks, your collateral gets automatically sold off at a loss to cover your loan. That's liquidation. It's brutal. Peak money is designed to completely eliminate that risk, making high-yield DeFi way safer and more accessible for normal people who can't just stare at charts 24/7.
The secret sauce here is really the mechanism. Instead of force selling your collateral when the market dips, the protocol just automatically repays a tiny portion of your stablecoin debt to get your position back in a safe zone. Your yield might dip for a bit, but here's the crucial part. Your original assets are never, ever sold. You get to ride out the storm without getting kicked out of your position at the absolute worst time.
Okay, so this all sounds great for users, but what about the actual Flow token? How does all this new activity benefit the token itself? Well, this is where the economic engine really kicks into gear, creating a direct line between how much the network is used and the token's value.
You know, for the longest time, one of the biggest knocks against Flow has been its token inflation. It's created a lot of sell pressure, which has held the price back. But there's a new proposal in the pipeline that aims to flip that dynamic on its head.
And this is the key takeaway right here. If the network can sustain 250 transactions per second, which is very achievable, the tokenomics are designed to become deflationary. That means the fees from transactions would actually burn more Flow tokens than are created. The total supply would go down over time. I mean, that's a massive economic shift that would create natural buy pressure.
But look, this whole pivot isn't just about chasing DeFi yields for the sake of it. It's about building a stable, sustainable, and economically sound model that can finally convince the world's biggest brands to come build on-chain.
I mean, think about who we're talking about here. These institutions don't gamble. They need proven, rock-solid platforms. A system that offers no liquidation DeFi and has deflationary tokenomics. That gives them the kind of economic stability and predictability they need to feel confident building experiences for their millions and millions of users.
So, what's the grand vision? The real endgame? It's for any consumer product you can think of, a game, a social network, a streaming service, to be able to just plug into DeFi super easily. They can then use these crypto rails as the economic backbone to offer all sorts of new financial services and value to their customers.
So this is Flow's big bet. They're betting that by building these safe, open, and economically sustainable rails first, they'll create an ecosystem so valuable that the world's biggest brands will have no choice but to join. The on-chain data shows the foundation is being laid. The only question left is, will they come?
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.